FHA loan limits have increased. One of the biggest changes that can help buyers is that FHA limits have increased in many areas. Now, it's important to note that FHA loan limits are not the same everywhere. There is a baseline loan limit that's used in many parts of the country, but higher cost countries have significantly higher limits. So this means buyers in more expensive housing markets may still qualify for FHA financing on homes with much higher purchase prices. So if you're not sure what the FHA loan limit is where you're buying, that is something your lender can quickly look up for you. So why does this matter? This is important because FHA financing allows many qualified buyers to purchase a home with as little as 3.5% down. This opens the door for many who may have good income but have not saved a large down payment. And depending on the transaction, sellers may also agree to contribute towards some of the buyer closing costs through seller concessions. Every transaction is different, but those options can make home ownership much more attainable than many buyers realize. This is good news for sellers. It's not just good news for buyers, because when financing becomes available to more qualified buyers, the pool of potential buyers grows. More buyers often means more competition, and more competition can lead to a stronger offer. That's why if you're planning to sell your home, it's important to make sure your property appeals to as many buyers as possible. You don't want to limit your buyer pool unnecessarily. Whether a buyer is using FHA, VA, USDA, or conventional financing, your goal should be to have your home ready for all qualified buyers whenever possible. Now let's talk about mortgage insurance. One thing that often confuses buyers is mortgage insurance. Here's a simple way to think about it. If you're putting less than 20% down, many loan programs require some type of mortgage insurance or guarantee fee. For example, FHA loans include both an upfront mortgage insurance premium and an annual mortgage premium. So if you put less than 10% down, that annual mortgage insurance generally remains for the life of the loan unless you refinance into another loan type. And this is for FHA loans. If you put 10% or more down, it typically drops off after 11 years. With a conventional loan, private mortgage insurance, or PMI, can usually be removed once you've built enough equity in your home. And with USDA loans, buyers pay guarantee fees instead of traditional PMI. If you're eligible for a VA loan, there's generally no monthly mortgage insurance at all, although many VA loans do include a funding fee unless you're exempt. The important thing is not memorizing every rule. It's understanding which loan program fits your situation best. So don't choose a loan based only on the down payment. One mistake I see buyers make is choosing a loan based only on the smallest down payment. Instead, look at the entire picture. What's your monthly payment? How much cash do you need at closing? How long do you plan to stay in the home? Will refinancing later make sense? The right loan is not always the one with the lowest upfront cost. It's the one that helps you reach your long-term financial goals. Mortgage applications are increasing. One trend I'm watching closely is mortgage application activity. Compared to the slowest period over the last couple of years, we're seeing more buyers beginning to re-enter the market. Now, that does not automatically mean home prices are going to skyrocket overnight, but it does tell us something important. People are adjusting, buyers are realizing they cannot always wait for the perfect interest rate, life continues moving forward, people get married, families grow, jobs change, kids start school, and at some point, housing becomes a life decision, not just a financial one. So that's why we're beginning to see more activity than we did when many buyers completely stepped out of the market. Now, interest rates are still important, but they are not everything. Whenever I post a housing market video, someone asks, should I wait until the rates drop? And the honest answer is nobody knows exactly where mortgage rates are headed. There are forecasts, but they are still forecasts. What matters more is whether the monthly payment fits comfortably into your budget. If rates decline in the future, refinancing may be an option, but if the right home comes along today and the payment works for your financial goals, waiting is not always the best strategy. Trying to perfectly time the market is incredibly difficult. Instead, focus on buying when you're financially ready. Don't count yourself out. One of the biggest mistakes I see buyers make is deciding they cannot qualify without ever even talking to a lender. I've met so many people who assumed they needed a 20% down payment, an 800 credit score, years of savings, and in many cases, none of those assumptions were true. There are FHA loans, VA loans, USDA loans, conventional loans, and depending on where you live, there may also be down payment assistance programs available. That's why I always encourage buyers to learn their options before ruling themselves out. Now, why first-time buyers are buying later? Another interesting trend is that the average first-time home buyer is older than it used to be. Housing affordability has become more challenging, home prices have increased over time, and monthly payments are higher than they were several years ago. Many buyers are also carrying student loans, auto loans, or credit card debt, making it harder to qualify. And at the same time, many people are choosing to wait longer before purchasing their first home. And there's nothing wrong with buying later if that's what makes sense for your life. Everyone's journey is different. The important thing is buying when you're financially prepared, not because you feel pressured by a certain age. Let's talk about why homeownership still matters. Even with today's higher interest rates, homeownership continues to be one of the primary ways many families build long-term wealth. Every mortgage payment you make can help build equity over time. Historically, real estate values have generally increased over the long term, and although there are always periods where prices can level off or decline. That's why I encourage people to think about buying a home as a long-term investment in where they live, not as a way to get rich quickly. You're creating stability, you're building equity, and you're investing in your future. Now let's talk about renting versus owning. Renting absolutely makes sense for some people. If you're planning to move soon or you're not financially ready to buy, renting may be the better option. But if you know you're going to stay in an area for several years and you're financially prepared, homeownership offers advantages that renting simply cannot. Instead of paying rent month after month, you're gradually building ownership in an asset. Again, that does not mean buying is right for everyone, but it's worth exploring if you've been wondering whether you're ready. My advice, if you're thinking about buying a home this year, don't spend months guessing whether you qualify. Find out, talk with the lender, review your options. I'd love to go over those options with you. Just click the link below. And even if you're 6 months or a year away from buying, getting a plan in place today can help you prepare with confidence. Sometimes it's simply a matter of improving your credit score a little, paying down a few debts, or saving a bit more for closing costs. Having a roadmap makes the process so much less stressful. The housing market is changing and we're seeing more buyers returning. Loan programs continue to create opportunities for qualified buyers, and there are more financing options available than many people realize. The biggest mistake you can make is assuming you cannot buy without first exploring what's available. Whether you're buying your first home or your fifth, having the right information can make all the difference. So if you're wondering whether now is the right time to buy, I'd love to help you explore those options. As both a real estate agent and a loan officer, I can help you compare loan programs, understand your buying power, and build a plan that fits your goals. If you're buying here in Colorado, I'd be honored to help you personally from start to finish. And if you're moving somewhere else in the country, I can connect you with trusted real estate agents who share the same commitment of serving their clients like me. Just click the link below and fill out the short form. I look forward to talking to you. I personally respond within 24 hours. I hope this video was helpful. Subscribe and hit that like button or share with someone that you know looking to buy a home. I'll see you in the next video.
I can put you in a house on a hill, put you in a condo in the city, put you in a mansion, put you in a mansion in Miami, put you in a mansion in Beverly Hills, put you in a mansion. I can put you in a mansion.